Hey, AJ Toss here with a quick market update. I'm going to show you guys how I look at the markets, basically just what my process is, and really what I want to get across to you is why I never panic or get anxious about investing in the markets, okay? And you don't need to either, with the rare exception of someone who's about to retire soon, in which case I would say, well, you already did it, man. You're here. You've arrived. No need to take any more risk, right? But most of us are still in our earnings years. Most of us have more than 10 years to let our holdings grow. Okay, let's take a look at history. This is the S&P 500. When people say the market, this is basically what they're talking about. This is a basket of all the big U.S. corporations, and it's a benchmark that basically no professional manager ever beats over any meaningful period of time. So the conclusion is, if you can't beat them, join them. We're heavily invested in the S&P 500, which is just American business in general. And here's why. Let's go back to this chart. All right, so this is the market over the last, here we go. This is actually the 40s to the 60s, and look at that. If you were looking at this, you'd be like, crap, I missed out. I better sell before markets fall. Oh no. Oh, but wait, they keep going up. They dip sometimes, but they keep going up. That was a pretty big dip in the 70s. That's inflation. It's kind of like what's happening right now with this dip. Inflation related, pandemic related, inflation related. But what do you think is going to happen over the long term with this? Do you think that we finally reached the end after all these decades? We finally peaked out and that markets are just going to keep going down forever? If I was a betting man, and I am, I'd be betting that this is going to continue to go up just like it always has. And I am betting on that. Here we go, back to 1985 to now. So why? Why does it keep going up? It doesn't make sense. I can't just trust this, just blindly trust that it's going to keep going up. Why does it keep going up? S&P 500, let's look at their earnings. Okay, this is what these corporations earn. And if you want to know, what companies are in here, all the ones you've heard of: Apple, Microsoft, Amazon, Google, Facebook, Nvidia, Berkshire Hathaway, JP Morgan, Chevron, Exxon, Nike, Hershey's, all the brands you know and love, they're all represented here. And this is a graph of what these companies' combined earnings are. Not all of them make money every year. There's a lot of boom and busts, but over time the earnings just continue to grow. And if you check out, this top tick right here, this is 2021. But a huge spike in earnings. So corporations have never earned more money than they're earning right now, and that is why markets, up until a few months ago, were at all-time highs, because earnings were at all-time highs. It's as simple as that. That's the way this game works. If you watch the financial media, they'll make you think that you have to linger on every word that the Fed says, and you have to be able to predict interest rates and predict inflation and predict earnings and all this stuff. You don't have to predict anything. All we're doing, we're casting our lot with American business. And we hold on tight because we know there's never been a 10-year period where stocks actually went down over the decade. Some might argue that the period from the bottom of the bottom of the crash in 2000 to the bottom of the crash in 2009 would be that 10-year period. You're technically correct, but guess what? Most people are investing along the way. So I'm investing in 2000 and 2001 and 2003. So by the time 2009 hits, I'm still doing better than I was 10 years prior, and I keep investing to 09, 10, 11, 12. And let's see. Let's look at the S&P 500 price over earnings. So you want to know how expensive or how cheap are stocks? This is a general gauge of how cheap or expensive they are. In 2020, 2021, really in 2021, I was encouraging people to kind of risk off a little bit because the PE ratio, not just because of this, but it's bigger. PE ratio got way up into the mid-30s, which would indicate that either stocks are too expensive or companies are about to earn enormous amounts of money, way more than we are currently predicting. I didn't think that companies were about to earn enormous amounts. I thought most likely scenario is that prices come back down to normal levels. Now, funny how fast things change these days, we're back into more of a normal range. Let's let's take a look at even after this downturn. If you had started, yeah, it's already, if you had started investing in July of 2012, okay, and you'd never sold a share, you made all this money up to 2021, at the end of 21, you're like, oh my gosh, I made so much money, you know, even if you didn't sell the top and you endured this crash, you still making an annualized 13% return. To put that into perspective, if you make 13% returns consistently, you can double your money every 5 years, 6 years. So 12 years you can have 4x. In 18 years you can have 8 times the amount of money that you started with in 18 years if you're able to achieve this return. Is that happening with your savings right now? Probably not. But it could. It could. It really could. Last thing I want to show you. By the way, it really could, but that involves not panicking, never selling out of the market, only buying, never selling until you're ready to basically retire from investing, or at least significantly risk off. So I always like to say 6,000. Okay, let's say we put a $6,000 a year into the market, $500 a month, and I'm 30. Well, I'm 34. Let's say I'm going to retire at 65, so let's do 31 years. And let's say you get a return like we just got over the last decade, which was what, 12.9. Okay. Let's say 12.5. All right. Look at it go. 12.5. So if you were able to repeat the last 10 years returns for 31 years instead of 10, and you just invest $500 a month, it'll only take you 30 years to be a multi-millionaire. That's pretty good. That's why we invest. But, you know, even though these returns look like they're going up in a straight line, it was anything but. You know, you have good years, good years, and there's always more good years than bad years. The point is, you can't freak out in the bad years. You just got to hang on tight and wait for the good years to come back. It's like the old, you know, this was written in the Bible like 3,000 years ago about the years of famine and the years of plenty. All you got to do is save up consistently over time, and you'll be able to withstand all the famines, and you'll be able to stick around to enjoy the years of feast. So I hope that encourages you to stay the course. If you're still anxious about markets and investing, highly encourage you to reach out to me. Let's have a quick session where we talk about your particular finances, your goals, your situation in life, and we'll come up with a plan to grow your net worth safely in a way that allows you to sleep well at night, knowing that your savings are being well taken care of. And really that, you know, the 8 hours, or maybe some people more, the 8 hours a day you spend working, instead of doing whatever it is you feel like doing, you're doing that in exchange for money. And it feels really good to know that that hard-earned money wasn't for nothing. I mean, it could be wasted. A lot of people do waste their money, but we know what's going to happen with our money. It's going to grow. I'm not making $15 an hour. I'm making $15 an hour plus whatever my savings turns into over time. Okay? So please be encouraged and happy investing.